And now let's see what the local market thinks about some of that economic data. Earlier I spoke with Martin Lakos from Macquarie Private Wealth. Martin Lakos, Wall Street down almost 1%, but I guess it could have been worse?
Yeah, look, actually, we had a very strong rally. It almost came out of the blue. In fact, first thing this morning after Wall Street closed, the Aussie futures were up 60 points, so certainly indicating a better day anyway. But we ended up closing up about 108 points. No specific news out there, although it does appear there might be some switching into equities. We had through our day's trade copper improving, but gold took a big tumble, down $55 at one stage to a low of $18.18 an ounce. Currently hovering around about $18.30, but there was talk on the size of the sell down. There might have been some switching into the equity markets. We'll have to certainly keep an eye on that. Also, on the back of the GDP numbers, the market sort of continued to rally up from about up 70 at 11.30 and continue that rally. And we also saw the Aussie dollar pick up on the back of those GDP numbers.
Yeah, those growth figures, of course, were a lot better than expected. Was that a huge part of the market movement today?
Look, it's a good component. I think analysts had started upgrading to looking for a 0.8 to a 1% rise, came in at 1.2. What's still interesting, though, is the makeup of that component. That we did see weak business investment, reasonably strong inventory rebuild, and probably the positive surprise was household spending was up. Now, I can give you a few stats on that, if I may. We had a pickup in transport services of almost 6%, clothing and footwear up about 2.5%, spending at hotels, cafes and restaurants up nearly 3%. So pretty much broad-brushed improvement in spending, and what we did see is a commensurate reduction in savings. Now, we shouldn't panic about this. We've had savings running at about 11%, 11.5% to be exact, now down at 10.5%. That's still twice the long-term average of the last 10 years. So Aussies are still putting money away.
Now, at the same time, we've had Reserve Bank Governor Glenn Stevens speaking in Perth. Anything interesting from a market point of view?
Well, I think the takeaways we're getting from the Reserve Bank, both in terms of the Perth speech and also from the decision on Tuesday, Tiki, is that they're still basically saying, be calm, Australia's in good shape. You know, obviously commentary in regards to our strong trade surplus, the banking system's in good shape, all of this sort of rhetoric. The commentary that obviously might worry some people is that there's clearly some more focus on the Reserve Bank in regards to what's happening overseas on the global outlook. And it's more about the rate of change of the deterioration in that global outlook and how that might impact the domestic activity. But at this stage, there's no sign the Reserve Bank wants to cut rates. I think what we're going to have to really see is to see if unemployment starts ticking up further from 5.1. We've got a number out tomorrow, Thursday. It won't tick up too much, but if we saw 5.5% over the next couple of months, that might be enough to trigger the Reserve Bank to think about their current settings, and they're clearly going to be watching inflation very much so.
And really slim pickings in terms of company news, but blood products maker CSL had a bit of a share price increase. What's the story there?
Well, don't forget, we've had an enormous amount of information from company reporting season, Tiki, so it's actually nice to have a bit of a breather. But no, very good point. It is quiet on the company front. But what happened overnight was the Swiss government the Swiss National Bank decided to cap the Swiss franc against the euro, and in fact we saw the Swiss franc drop 8%. Now that's positive news for a company like CSL that has a large proportion of its total costs tied up in Switzerland. So we did see, or it does appear in our view, that there could be an improvement on their FX exposures by almost $35 million. So in the August result, they had highlighted $85 million of FX losses potentially. That could be reduced by as much as $35 million. So good news, and that stock rallied over $1 today, or nearly 4%.
Martin Lakos, thank you again for talking with us.
Always a pleasure, Tiki. Thank you.